Please subscribe to my channel by clicking the subscribe button. It is absolutely free of cost. Please click on the bell icon to receive the notifications regarding all my newly uploaded videos. I'm Gurpreet Singh Chhabda and I welcome you all to my YouTube channel. The topic of discussion for today is the role of RBI in Indian banking system. When it comes to competitive exams, if you're from India, you are very well knowing of the fact that the questions on general knowledge are now part of almost each and every competitive exams. When it comes to general knowledge, it can be questions from any field, banking, finance, sports, etc. When it comes to banking, it can't be the case that the questions on RBI are missed out. So, if you, your friends, your colleagues are preparing for their competitive exams, make sure to share this video with them. Also, being a citizen of country India, you should be aware of the roles of RBI in the Indian banking system. Without wasting any further time, let's get the learning started. I'll give you all now the introduction of RBI. The full form of RBI is Reserve Bank of India, and the image which you're seeing right next to this video is the seal of RBI. RBI, that is the Reserve Bank of India, is India's centralized banking institution. It was established on April 1, 1935 as per the Reserve Bank of India Act 1934. In year 1949, it was nationalized. Some facts related to RBI. The headquarters of RBI are situated at Mumbai, India. RBI has 4 zonal offices which are situated at Chennai, Kolkata, Delhi and Mumbai. RBI has 20 regional and 11 sub-offices. RBI is completely owned by Government of India. The current and also the 24th governor of RBI is Mr. Urjit Patel. Now, let us all move to the topic that we all are waiting for. What are the roles of RBI? The first role of RBI is to issue bank notes. For this, RBI coordinates with 2 companies. The first company is Security Printing and Minting Corporation of India Limited, SPMCIL. It is completely owned by Government of India. This company has 2 printing presses, one situated in Nasik in the state of Maharashtra in India and another situated in Devas in the state of Madhya Pradesh in India. This company, apart from printing the notes of India, also prints notes of other countries like Iran, Bhutan, etc. The second company which RBI coordinates with is Bharatiya Reserve Bank Note Mudran Private Limited, BRBNMPL. It is a subsidiary of the Reserve Bank of India. This company also has 2 printing presses, one which is located in Mysore in Karnataka and second one is located in Salboni in the state of West Bengal in India. So both these companies print notes for India. Regarding coins, the coins are minted at 4 locations in India, that is the Mumbai, Hyderabad, Kolkata and Noida. So these are the 4 locations where coins are minted. The RBI coordinates with both of the companies and issue bank the notes. So this is the first role of RBI. The second role of RBI is to control the inflation. How RBI controls the inflation? For this, you all need to understand 5 terms, out of which the first term is the bank rate. You all might have approached a bank at some part of your life to get a loan. If the bank has the cash, they'll give you the loan. If they don't have it, they'll themselves take a loan from RBI. The rate of interest at which the RBI gives a loan to a bank is known as the bank rate. The important point in case of bank rate is that there is no security collateral involved in bank rate. The second term is the repo rate. Repo means repurchase. Repo rate is also known as discount rate, and this is almost similar to bank rate. The key difference between a bank rate and a repo rate is that in case of bank rate there was no security involved, while in case of repo rate there is a security involved. So the bank takes loan from RBI on submitting certain kinds of securities collaterals, and they agree to repurchase those securities, hence the term repo rate. The third term you all need to understand is the reverse repo rate. As the name suggests, it is the reverse of repo rate. So whenever the banks have surplus amounts available with them, they can deposit these amounts in RBI and they'll get interest out of it. In the first two cases, the bank rate and the repo rate, the RBI was getting interest out of the banks because they had given loans to banks. And the current levels of repo rate, bank rate and reverse repo rate in India are 6%, 6.25% and 5.75%. Bank rate is always higher than the repo rate. The fourth term that you all need to understand is the cash reserve ratio, CRR. The RBI mandates each and every bank to deposit certain percentage of their funds in RBI. Now this is known as CRR. They don't get any interest out of this deposit of funds in RBI. The current CRR rate in India is 4%. It means that the bank needs to deposit 4% of their current funds into RBI. The fifth term that you all need to understand is statutory liquidity ratio, SLR. It is also a mandate rule by RBI wherein the banks are mandated to deposit their securities, their funds to RBI, and they get interest out of it. In case of CRR, the banks are not getting any interest out of their deposits in RBI, whereas in case of SLR, the banks are getting some interest out of their deposits of securities in RBI. The current SLR rate in India is 19.5%. Having understood these five terms, now it will be very easy for you all to understand as to how RBI controls inflation. What is meant by inflation? Inflation is a condition that arises when the demand in the market exceeds the supplies in the market. If I have to give you a simple example, there are four persons who wish to buy certain product which is available 2 in quantity. Now, out of these four persons, 2 are rich and 2 are poor. And as the quantity is very less, the quantity will not meet the requirement of the four persons. Now these two persons will try to offer maximum price with the aim to grab that product. The poor persons will not be able to do so just because they can't offer that much price offered by their counterparts to rich persons. So, and the vendor will give these two products to the rich guys. The condition which is arising now is inflation. The demand exceeds the supply, and this is very wrong condition for the growth of any economy. So the RBI needs to control it. Whenever RBI wishes to control the inflation, it will raise the CRR, it will raise the SLR, bank rate, repo rate. So what has happened now? Raising the CRR, raising the SLR, the banks are mandated to deposit much amount of their funds into RBI. There is no cash available now in the banks. Now any person approaching the bank for a loan will not get the loan just because the funds of the banks are already occupied in a different platform, that is RBI. Now if any bank gives a loan also to a person in case the bank has surplus amount of funds, the RBI will raise the repo rate, bank rate. Now what will happen? Any loan that is given by RBI to a bank, the RBI will charge a higher rate of interest. Similarly, the bank will charge a higher rate of interest if it's a bank rate. The bank will charge a higher rate of interest on the loans given to the people. Now the people will not prefer taking loans just because they are being charged at a higher rate of interest. So what has happened now? The purchasing power of a person has been restricted, and the aim of Reserve Bank of India, that is to control the inflation, has been successfully met. So this is how RBI can just manage within these different rates and control the inflation and the liquidity power in the market. Having understood the concepts of CRR, SLR and reverse repo rate, you can easily now understand the third role of RBI as custodian of cash reserves of commercial banks. The fourth role of RBI, that is, RBI acts as a lender to the banks, can be easily understood if you have understood the terms bank rate and the repo rate. Now we move on to the fifth role of RBI, that is, RBI regulates bank. The first four roles supports this idea that RBI has partially regulated the bank to some extent. Also, it is the responsibility of the RBI to implement certain kinds of norms, certain kinds of guidelines, so as the banks follow these norms, follow these guidelines. Some of the other ways in which RBI can regulate a bank. First is the licensing. Any bank which wishes to start a branch in any city has to approach the RBI to ask for a license to do so. Without the license provided by the RBI to the bank can't start branch at any locations. So this is one of the roles in which RBI can regulate the bank. The second is OSMOS, that is the off-site surveillance and monitoring system. This is a system according to which the banks are supposed to showcase their performance to RBI. So this is one of the roles in which RBI can regulate the banks. The third is RBI provides security to the funds of the depositors also. Remember point that by the concept of CRR, SLR, the RBI acts as a custodian of the cash reserves of any bank. So anytime the bank is not able to perform itself, or it is not going in the right direction, as to there is a lot of risk to the depositor's money, the RBI acts as a safety feature to the money of the depositor. The depositor can be ensured of the fact that his money is not going into vain. So this is one of the ways in which RBI can regulate a bank. Also, there are many other ways in which RBI can regulate a bank. One is the parabanking activities. Parabanking activities are the ones which are not completely dedicated banking activities. There are other kind of activities like cards, mutual funds, asset management, in which RBI also plays a key role. The other activities in which RBI can regulate a bank is corporate governance of the bank. The RBI has the right to just check how the bank is performing, whether the directors of the bank have the proper training related to the banking sector. The RBI can also appoint directors if it feels so that the bank is not performing to its expectations. Also, RBI carries out an annual on-site inspection in which different documents of the banks are scrutinized as to check whether the banks are really performing to the expectations or not. Apart from this, RBI can monitor the interest rates offered by the banks to its customers. It can monitor different types of documents of the bank. Also, it can check whether as to the bank is not carrying out any fraudulent transactions. So these are the few roles in which the RBI can regulate a bank. Sixth role of RBI is it acts as a banker to the government. The RBI acts as a banker to both the central and the state governments. As a banker to the government, the RBI can involve itself in all banking transactions, whether it's related to payments, whether it's related to transfer of funds from one country to the other. The RBI can maintain the account of the funds available with the government. In return, the government keep their cash reserves in their current account holdings with RBI. The RBI is also responsible for carrying out any kind of exchanges of the currency of the government funds. The RBI can also give governments short-term credits if the governments have faced certain kind of shortfall to achieve their purpose. So this is how RBI acts as a banker to the government. The seventh role of RBI is it acts as a custodian of the foreign currency reserve. The central bank of any country is allowed to keep foreign currencies also. The Indian Central Bank, that is the RBI, also does so. RBI has foreign currencies which mainly compose of US dollars in the form of bonds held in the US based institutions. The 5% is held in the form of golds. The list of countries which rank in how much they own the foreign currency reserve of any country, India ranks 8th in the list of foreign currency reserves of any country. The eighth role come into picture out of this. The RBI maintains the exchange rate stability. How does the RBI maintains the exchange rate stability? It is very simple. The RBI holds US dollars as a primary foreign currency reserve. Now, anytime the value of rupee goes down as compared to a dollar, it simply means that you have to give more and more rupees to achieve $1. So that is the case when we say the value of the rupee has gone down. Why does this happen? It mainly happens when we are importing a lot from other countries. So what has happened now? Because of this import, the demand has risen and the supply may not be available to fulfill that complete demand. So the value at which this supply will be given to any country will be very high. And we can, if that supply is from the country US, they'll raise the price at which they will export their products to any country. And hence we can say that the value of a dollar has now risen, and in the other case the value of rupee has gone down. As the RBI has to control the situation wherein the rupee value has gone down as compared to the dollar value. So what will the RBI do? It will start promoting the exports. So whenever the RBI promotes the exports, like it offers more and more advantage to the export of goods, the companies believe in exporting the goods more often. Doing exports more often raises the value of the rupees. How it will raise? Suppose you consider the case of inflation wherein the demand had exceeded the supply and it was not good condition within a country. But we have faced a case in which the rupee value is going down as compared to the dollars. So whenever we wish to export to any country, it might be the natural case that we may not be able to support the demand, and so we have to raise our prices to support certain minimum amount of people only. So what we have done now, by raising the prices, we have raised the value of rupee, and when compared to that of the dollar, it might be nearly the effect of the earlier effect wherein the rupee was going down as compared to the dollar has nearly been neutralized. So this is how RBI maintains the exchange rate stability also. So these are the few roles of the RBI in which RBI successfully monitors all the banking transactions, all acts as a central banking institution. Thank you all for watching this video. Make sure to subscribe, guys. It acts as a motivating factor for me to make such good videos for you all. Please subscribe, guys. The link to subscription is just here. You can just click to my picture and they'll open a subscribe button which you can click on. It's absolutely free of cost. So guys, please subscribe. Thank you. Goodbye.